and the stock market is crashing big time. So I'm going to go over the CPI, the report that came out this morning at 8:30, which led the market to, as of right now, I mean, it's almost 2 o'clock, a really, really, really bad day. So let's get into it. I'm going to go through the CPI report in detail, what it means, and why the market went straight down. So I just want to share with you guys because this is really, really important. Don't listen to anyone. Do your own due diligence, because this right here, what I'm showing you, is from Credit Suisse. This is from this morning at 8:30. So their forecast was for month over month negative 0.2% for the CPI, the headline number. The core was to see an increase of 0.2%. And then they give you all of these reasons why they've come to this conclusion. Headline year over year, CPI likely fell for its second consecutive month to 7.9% in September. So they were dead wrong. Credit Suisse has thousands of people working on this printout that you see right here. Probably not thousands, but definitely a lot of analysts working on it. And they could not have been further from what the actual numbers were. So this is a lesson. Just because you see something credible, right, it doesn't mean that they're going to be right. And this goes with anybody. Even Jim Cramer, just totally wrong about this, about inflation. Most of them have been. So looking at the heat map on the day, you can imagine really, really, really red everywhere. The Dow is now down almost 900 points. If we look at the chart on the SPY, the report comes out at 8:30, and we go from 4:15 in a 1-minute candle all the way down to 4:05, and then have continued to just bleed out all day long. We're now under the 50-day moving average. Key levels meant absolutely nothing. This just totally tanked, caught a lot of people off guard because they read the same thing that I just showed you. And a lot of people thought that inflation was going to come down really, really quickly because gasoline prices came down. So let's break it down why and what the numbers were. So in order to do that, we're going to go over here to the government. This is a government website, and we're going to look at the CPI. All right, this is each month of the year. We're focused in on August, which is right here. So it's September now, but we got August's reading, obviously, right now. So all items went up 0.1%. That's the headline inflation number. That's that number that you see over the year over year number. So that went up 0.1%. So 8.3% is what the year over year headline number was. Like we saw on Credit Suisse, they thought it was going to be a 7 handle. They were obviously wrong. And I think the estimates were for August to come in at minus 0.1%. So this is right here in July, the 0.0%. That's when Joe Biden came on and said, we have zero inflation and got, mocked all over the place. That's what he thought was zero inflation, just because it didn't go up from the month before. So in August, they were expecting it to come down, to see that first month of actually, declining headline inflation. It didn't happen. All right. So that's one thing. That's the headline number that you see all over the place. But what the Fed looks at is the core. So the core inflation, that's right here, 0.6%. That is all items minus the food and energy. So that was 0.6%. The estimates on Wall Street were for 0.3%. A very, very bad number here for inflation. Credit Suisse, they were at, I think, 0.2%, if I'm not mistaken. So they were way off on the core. This is what the Fed looks at mostly. And what led to inflation being really, really bad? Because you had gasoline prices, you see here, come down a lot. So that helped the inflation number a lot. But what went up and continues to go up is medical care services. This is a big one. It doubled over last month, and all the new vehicles, they continued to go up as well. So, like I said, they were totally wrong on what they were projected and what ended up happening. So right here, they were expecting a decline, like I said, of 0.1%, with a rise of 0.3. So we saw a gain of 0.1%, and we saw a rise of 0.6%. Both missing estimates, and that sent the stock market straight down. And the reason for that, the last couple days, we have seen the stock market go on a nice run. It went on a nice rally. We can look at this on the 180-day. You can see here, we ran all the way up to the 200, came back, and then the last 4 days put in a very nice move from 390 in support. And now we're giving it all back. Everyone was caught off guard on this, and we're not prepared to see that inflation number. I don't know how long this will last, if this will continue over the next couple of days to go down, or it gets bought up. And that's what I'm watching for. I'm watching to see if the dip gets bought, and want to see how strong this rally has been. If it's really a strong rally and there's conviction in it, this should get bought up. So far, that has not happened. So far, we are just at, almost lows on the day. But it's only 2 o'clock in the afternoon, so who knows? What I traded was the Russell, and this is just bouncing along this key level right here at 1850. So this is at a key spot for the Russell, but these are all down over 3%, just huge drops. I'm up $300 on this for trades. Not too bad. So that's it. I hope that you guys maybe learned something about the CPI and, what it means. It means that the Fed will have to be more hawkish. They'll have to keep rates higher, most likely for longer. And now in the next FOMC meeting, there's a chance for, a 100-point move, basis point. Priced in is currently 75 basis points, but now they're talking about maybe going 100. Who knows? I think probably just 75, but we'll end up seeing probably rates just need to stay higher and for a longer time, and that could cause recession. So that's it, guys. Hit the thumbs up for me. And if you're new, subscribe. We have new videos just about every single day. Enjoy. Take care.